Hey, y'all, Zach McDonald, your real estate agent with Real Property Associates, and this is my Seattle housing market watch for October 28th, 2025. All right, we're going to jump right in here today. We're going to talk about the housing market here in the greater Seattle area, starting with the Market Watch stats. So we're going to look at King and Snohomish County as a whole, and then we are going to look at each county a little bit more in depth, look at the pending stats. This is my favorite part because I think it gives us really good data about what's currently happening and what we can be looking forward to on a week-by-week basis, as opposed to the monthly stats. And I love the monthly stats for their own purposes, but I think that the weekly pending stats helps us see a little bit more about what's going on as it's happening versus looking back at the market. So this week, before we look at the stats, I just want to talk about mortgage rates really quick, because mortgage rates are now, as of today, on Mortgage News Daily survey 1028, at 6.13%, which is the lowest that we've seen this year and slightly lower than last week. And something that I want all of you to know, and I talk about this fairly regularly, but if you're new to the channel, this is for you especially. The rates are moving in anticipation of the Fed policy and the jobs data and inflation data, just all of it really together, right? The markets are moving and the mortgage rates are moving in anticipation, not as a direct response to rate cuts. And so the rate cuts that are anticipated and might happen are going to potentially drop the Fed rate, but will likely not cause mortgage rates to continue to go down. We might even see rates go up. And the conversations at the meeting are more important, I would say, than a cut itself, because that's usually what we see the markets responding to. What are we anticipating to happen in the future? If the price and the conversations are already built into where rates are now, there's an anticipation about what's going to happen in the future, and that's what tends to affect the markets a little bit more. So when we're thinking about mortgage rates, we're not thinking, oh, Fed rates down, mortgage rates are down. We're thinking, okay, what's the conversation around rates? What's the conversation around the economy, around inflation? And that's what's going to dictate how the mortgage market ends up moving. And so the last couple of times we've seen rate cuts, we've actually seen the rates go up and back down now, but they went up in response, not down. And so I want to point that out so that nobody's surprised if and when it happens at the next meeting. Now let's talk about the market in general here in Seattle. We've seen a decline in the greater Seattle area in the new listing inventory, and we've been talking about that. This is another week over week drop. I think this is 5 or 6 in a row now, if my counting is correct, that we've seen new listings decline. So 517 new listings this last week in King and Snohomish County combined, residential single family listings from 1021 to 1028. That's what we're looking at. New listings the previous week, 611. So pretty big drop. This is all normal stuff. This is what we expect to see in October. I would be shocked to see a huge amount of new listings coming on the market right now. Things tend to slow down this time of year, not speed up. Now, the buyer activity has remained relatively high, even though the listing activity is starting to decline. We saw more pendings, 782 pending sales versus 719 the previous week. So even though we saw almost 100 fewer new listings, we saw, I would say, pretty close to 100 more pending sales in the previous week. So what happens when you have more pendings and solds than you have new listings is you start to see the supply shrinking up, which increases the competition. Now, we're seeing lots of houses that are still sitting on the market. We're seeing prices negotiated. In general, houses are selling below the asking price, not above the asking price. So that means for buyers that what you're seeing as the asking price in general, you're actually getting it for a little bit less if you're interested. In sellers, that's what your expectation could be. I think for the buyers in the past, there's been this concern that whatever they're seeing is just the starting point. They have to go up from that. And that is not the case right now in this market, but that could change relatively quickly if we start to run low on inventory. I think one other number here to point out, we're seeing quite a bit of solds as we're wrapping up the month, 579 sold listings, 596 the week before, so the end of the month finish here. I would expect that we're going to start to see a tiny bit more coming on the market here in the next couple of weeks before the Thanksgiving holiday. And then generally speaking, from right around Thanksgiving until the new year, it is relatively slow as far as new listings coming on the market. So for sellers, this is generally a time where they start to consider a sale, but not put their house on the market. It would be conversations around how to prep the house for sale, how to make improvements that either increase your value or make the house a little bit more saleable, help it sell a little bit quicker. I think this is the time of year where you start to prepare as a seller, but not to necessarily put your house on the market. Now, everybody has different situations, and so there are certainly times where it makes sense to list your house. The majority of the new listings I'm seeing right now tend to be estates or a divorce or somebody moving out of the area, a situation where they need to sell their house. Maybe the tenants are out, right? Just the timing works out versus strategically putting their house on the market in the fall. Now, at the same time, this isn't necessarily a bad time to sell because, well, we've just talked about there's a lot of buyers in the market, but in theory, there's more inventory right now and there are fewer buyers now than there will be in the spring. And so you're not going to have as hot of a market in the fall as you would heading into the maybe midwinter to spring market. That's when it tends to be a little bit hotter here. Now, let's talk about pending sales data in King County first, and then we'll talk about the pending sales data in Snohomish County. And I had somebody ask, it would be great if we could break this out by price point, and I think that would be great too. Unfortunately, I don't have great ways to do that. I have no way to do that with the pending data. It's pretty restrictive as far as what the MLS tracks and allows access to. And so I'm sharing what I can. I can break it up into specific cities. So if anybody's ever curious, as you're watching this, feel free to reach out to me. It'd be easier maybe over an email. I'm happy to give some more specifics for certain areas. I don't have the bandwidth to go through every single city and all of these updates. So maybe we can incorporate some type of a highlight. I'm open to suggestions of a way of maybe highlighting certain areas on a weekly basis. But again, the bandwidth isn't there for me to do this on every single city, every single time. So that's why I go with a little bit more of a broad brush for those that are listening. So I think King County, if we're looking at the data here, last week, median sales price. So again, this is from 1021 to 1028, 935 was the median sales price. Last week, we were talking about 867, 495. And again, all of this is on a weekly basis, not the best picture, especially the pricing, right? Because it's just dependent on what listings went pending that week. But 935 is a pretty big jump from the previous week, a little bit closer to what we would expect to see the median sales price to be in King County. The average sales price to list price ratio, 98% over the past week. The previous week, 99% of the asking price. Not a big drop off there, but I mentioned earlier in this video, you're likely to be able to get the house below asking price right now in King and Snohomish County. Again, there are exceptions to that, and we'll talk about that in a minute, but there are plenty of listings that are on the market for a little bit of time. Maybe they're overpriced. Maybe they're priced for what the market was like before, but the market's already shifted. There are lots of reasons for that, but there are certainly houses that are not flying off the shelf. At the same time, there are plenty of houses still getting multiple offers. King County, 26% of all the offers last week or all of the sales last week sold with multiple offers, more than 25%, and that's a 3% jump from the previous week. We also saw 7% of the sales have an escalation addendum included, so that would mean that the buyer was willing to pay more than the other competitive offers, potentially over asking price, maybe not, maybe up to the asking price. We don't know for sure. But we do know that houses on average are selling below asking price. But there are still a good portion of houses with the multiple offer scenarios. Now, if we look at the rest of the data that we can track, we have the pending sales with financing addendums and also the inspection addendums. So this is a taste of how competitive the contingencies are in an offer. 76% of all the offers last week had a financing addendum in King County, 74% the previous week. So a little bit less competitive on the contingencies. The inspection addendums, 45% last week. The previous week, 46% in the update. So we've talked about on this update that these little shifts, right, micro shifts on a weekly basis, not a big deal, but when there's a trend, we talked about at the beginning how there's been a trend of fewer and fewer listings for weeks upon weeks at this point. That would be a trend that's pointing us in a direction versus, hey, yeah, a little bit of an uptick this week, a little bit of down. These numbers have been pretty stable, right? The amount of contingencies, as we've talked about this week over week. So nothing really big here. I think a similar market. We've been seeing, I would say, just a little bit of a slowdown. It feels like things seem to be really speeding up early fall, and they've been slowing down a little bit here as we've gone towards the fall winter market. Again, normal. There's nothing abnormal about what's happening right now in the market. I think there is some excitement or some hope about interest rates. We've talked about that too. We will see if interest rates keep trending down. If they do, it will most likely stimulate the housing market. If interest rates remain about where they're at, I think next year is going to be more of a little bit of a jump year over year type of year, not one of those we're seeing huge jumps on the prices. I think the 10 to 15% over asking price type of situations is behind us for now. But again, a lot can change with the interest rates. Now let's talk about Snohomish County a little bit. Snohomish County, always a little bit behind as far as pricing goes. It's not as expensive to live in Snohomish County. We've got a median sales price here over the past week, $732,497. That is up just barely from the previous week, $729,900. The percent of asking price, 98% versus 99%, same as what we talked about in King County. A lot of the Snohomish County market mirrors the King County market, and there are certainly parts of Snohomish County that are a lot more competitive, just like there are parts of King County that are a lot more competitive and a lot more expensive, right? But in general, there's a lot of similarities in the markets. But Snohomish County tends to be, as a whole, just a little less competitive than King County. Multiple offers, let's talk about those now. 20% of all the sales had multiple offers last week, 18% the previous week. So again, a small uptick in Snohomish County as well. So a little bit more competitive week over week. But the escalation addendums, interestingly, in Snohomish County were down 5% versus 7% the previous week. So although we saw more multiple offer scenarios, we didn't necessarily see more over asking price scenarios. And I can give a real example of that here even this week, putting in an offer for clients below asking price. And there was a competitive offer, but the competitive offer was even more below asking price. So not necessarily a competitive situation in the sense where people are paying over asking price. But again, multiple offers for the house. Maybe the seller is hoping to get a little bit better price. But the idea that there's competition, but not necessarily for what the seller wants in that scenario, that's not the case in all situations. But in our case, it's not a battle of getting to the asking price. It's a battle of getting a little bit more acceptable for the seller. If that makes sense. Now, the contingencies part, this is another piece of the negotiating puzzle. You've got the price, you've got the terms, and then you've got the contingencies. This is another huge piece. Fewer financing addendums in Snohomish County, 78% this week, 85% last week. Interesting fluctuation here. It's a little bit bigger than the couple percent week over week, but still within what we've been seeing. So I wouldn't say there's anything big there. Just some more cash buyers maybe. 45% of the offers a couple weeks back had the inspection addendum, and we saw 47% have an inspection addendum this time around. Interesting, we saw a little bit more competition, if you want to call it that, on the financing side, but less on the inspection side. But still, more than 50% of all the offers moved forward without an inspection. And I think that's still very significant when you're considering the competition in the market. Again, probably related to some type of a pre-inspection that the seller provided that made them maybe more willing to take an offer that was below asking price, right? If the buyer's not going to be negotiating with them on the other side of it. But nothing big here to report this week. A lot of similar trends. I think the big takeaway that I want you to leave today with is that we are transitioning into the fall and winter season where we are going to have quite a bit less to choose from, and we're going to have more competition entering the market as far as the buyers are concerned. So when you think of less inventory, when you have less options for buyers, that means that the market's going to be more competitive for you because there's less to choose from. The sellers, what this means for you is it's this consolidation period where the houses that have been on the market and have been sitting on the market for various reasons are going to start to disappear, and that's going to then give opportunities for the fresh listings that are to come. Again, some of them during this holiday season that's coming up, and more than likely after the new year. Thanks so much for watching this week's Seattle Housing Market Watch. And well, if you're still listening to this, I know you got some value out of this video. So a couple requests. If you are enjoying these videos, please consider subscribing to my channel. And if there's any way that I can help you or someone you know buying and selling real estate here in the Seattle area, I'd love to be a resource.